Gold is rising for the first time in 3 trading sessions. Here to talk to me about it today is Mike McGlone of ETF Securities U.S. Mike, thanks for being here.
Hey, Joe.
Mike, a lot of traders and analysts have been telling me that right now people should just stay away from this gold trade.
Well, gold's been kind of marking time. It's stuck around 1,300. Yesterday tested the 100-day moving average of 1,280. It's been suffering a little bit because equity has gone back up. It's spring. You've got your spring tie on. We've had, improved economic data. Equities are back near the highs, attracting new data. But gold just dipping below 1,300. A few signs of significant demand came back. Gopher rates or gold forward rates turned negative. 1 month, 2 month, 3 month forward rates are negative. So that's a sign demand's coming back. In the past, we saw that when it was around 1,200. So it might be coming back here. But the key thing we're watching is silver. Silver is basically considered leveraged gold. Oftentimes it moves about 1.4 times gold, has a high correlation. It virtually never disconnects. So far this year, silver has been kind of the oddball. It hasn't really moved. And 30-day volatility in silver has dipped to the lowest level since 2005, around 13%. So there's a market ripe to move. So our thought is it should provide a good precursor indication. It's supposed to go up, but if it goes down, that's going to be a problem.
Well, speaking of the white precious metals, platinum and palladium are both down more than 2% for this trading week. Why are we seeing them severely underperform what is already not a very good gold and silver trade?
The main reason is a thawing of the crisis, the strike crisis situation in South Africa. The #1 producer of platinum and palladium in the world is South Africa. There's been a strike since January 23rd, so this is the 3rd month. And there's a sign that strike might be ending. So there's a sign that could add a little added supply to the market, but the big picture needs to be reminded in people. And platinum and palladium at the beginning of the year would come to some of the key markets in physical supply-demand deficits. I mean, there's just a lot more demand than there's supply. This strike situation really took a lot of supply off the market, but it's not going to come back right away, and it's overall aggravated this situation for the year. So in the short term, there might be a dip. In the bigger picture, these situations are most likely to be alleviated with higher prices.
Yeah, and of course, people familiar with the precious metal space, always familiar with strikes when it comes to platinum, palladium. Mike, as always, thanks so much.
Thanks for having me, Joe.
That was Mike McGlone, Research Director at ETF Securities U.S. For TheStreet in New York, I'm Joe Deaux.